Today's video is truly the only analysis you need to understand the macro implications of the current daily horizontal consolidation. We are going over the current short-term price action, the most important levels you should be paying attention to, and of course the implications of directional breaks of this multi-month consolidation. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an amazing weekend. In today's video, we are taking a look at the macro and the short-term charts, discussing the recent developments in the short-term price action, our expectations on the macro moving into the new month, how the charts are developing, and what you should be paying attention to on the higher and smaller timeframes. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, we have a VIP sale on at the moment. You can find out more information by clicking the pinned comment in the free channel. We have a 10 to 30% discount. You can find our membership information by clicking the first link. That will take you to the membership detail link, and our entire trading track record by clicking that second link, including access to the main VIP trading channel. You'll also get access to our various group chats. We have over 700 members conversing on a daily basis. Check it out. And again, if you want to see a 10-minute video showing the inside the channel, click the membership detail link and then click the second link in that message to take you to a 10-minute video. Check it out, guys. Let's jump back on in. So taking a look at the price action on the short term, not really that much has happened. Bitcoin has seen a little bit of a correction toward the downside over the past 12 hours as some news developing around Trump introducing tariffs to various countries around the region, Mexico, Canada, etc., has bolstered up the dollar. And as we know, as the dollar pushes toward the upside, we generally see risk assets move toward the downside. As again, our risk assets, whether it be Bitcoin, Ethereum, or our stock market, they are valued against the USD. So taking a look at the short-term price action, we have seen slight pullbacks. If we're looking at the trend line we discussed in our prior video, this is going to be the overall uptrend spanning back from that massive correction to 88,000 way back in the mid of January. We can see this level is still holding as current support, which is a good sign, meaning we are still in an uptrend even though we have seen some shorter time frame volatility. We're going to be going over the short-term charts in detail, as well as both our monthly and our weekly charts, our daily charts, and of course discussing the altcoin and total market cap. We'll jump into all of this in today's video. Starting on the market data, 24-hour volume is up 27% at 211 billion. In fact, not massively high moving into the weekend. 211 billion isn't by all means a very high amount of volume, with liquidations up 79% at 273 million. We can see that over the 24-hour period, 164 million have come from longs and 109 million have come from shorts, showing us that over the 24-hour period, we have seen a larger upside move and a downside move in that same period. Moving over to the DXY has bounced toward the upside, again finding support on the prior level of resistance. Remember, what is once resistance becomes eventual support. So we have now retested this area, completing a support resistance flip. At the moment, we would expect the DXY to continue toward the upside, provided this most recently established low at 108 is able to hold, or should I say 107.3. If we do drop below this region, that is when we are going to be expecting corrections for the DXY, which could push the risk asset market toward the upside. Pay very close attention to that over the coming weeks. The S&P 500 Not looking amazing still. Again, we were looking for, and we are still looking for, 2 points of validation to confirm upward continuations. Point number 1 being a weekly high break. We had seen that. In fact, we saw that in our prior weekly candle. Point number 2 being the most important, and that is going to be a positive momentum shift on the RSI. Taking the RSI trend line back from the point at which the bearish divergence developed, being this high here, that corresponds with our first point. We've got our second high on the price action, which corresponds with the weekly high, and we have now our third point on the RSI, which is a pending breakout point. When the RSI is able to break through that trend line, that would indicate that the negative momentum, or should I say the exhaustion developing since our first retest, has been dissipated, has been absorbed, and the buyers are back in control. Until that happens, the possibility for corrections are still on the cards. And as we know, the S&P 500 and Bitcoin are correlated by a degree of around 70%. They are not influencing each other's movement. The S&P 500 does not control where Bitcoin goes. Bitcoin does not control the S&P 500 goes. They are both correlated, positively correlated by around about a correlation coefficient of 0.7, and they are both under the guides, or what we will call the dollar. Again, the strength of the dollar determines where these markets move. The dollar generally rises upwards. We're generally going to see corrections on these risk asset markets. So we're paying very close attention again to the DXY and any news that is developing around what could impact the strength of the dollar. We also have got some very important news coming up, which is going to be the inflation data. This is going to be coming out on the 12th. This is going to be very important, particularly as Jerome Powell in the prior meeting stated, and I quote, they are playing the wait and see game in terms of how they're going to tackle the future possible interest rate reductions. We are still expecting interest rate reductions, hence why the market is still relatively high, but they aren't classifying or specifically stating exactly how many they are going to do, except that they have reduced the amount from 5 to 2, and possibly they may increase the amount or decrease the amount based on how that incoming inflation data develops over the few months. We've also got NFP data coming out on the 7th. Again, unemployment and NFP is also leading for inflation, which could set us up nicely or set us up badly for that upcoming inflation data. Pay attention to that, guys. Let's jump in the video today. Before we get into it, make sure to sign up to BitGet, BitUnix, or BingX. These are the exchanges I personally trade on. You'll not only support me making this content, you'll support yourself in your trading journey by getting a massive 15 to 45% lifetime trading fee discount on all of your trades. Again, sign up with the links down below to get access to that. Go ahead, we'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, MegaWhale team, let's dive right back into the content, and we are starting on the weekly chart as we have been over the past few videos. And the weekly chart is very important because the weekly chart is showing us the current weekly range. The price action has been moving in ever since moving into that December period 2024. The weekly range is simply from the highest weekly closing price to the lowest weekly closing price over the period of the last 2.5 months. This is represented by the price action between our two horizontal black levels on the chart. We can see not yet have we seen a candle be able to sustain above or below these horizontal levels since we have created this current range. We've seen many attempts. In fact, we have seen 3 attempts toward the upside and 4 attempts toward the bottom side, and this weekly range has been established and is continuously being respected. If we take a measured move of this weekly range, it is going to give us a general guide of where we would expect the price action to move towards if we were to break upwards or downwards from this range. Applying that measured move, which is simply the distance from the top to the bottom of the range, applying that to the breakout, it will give us a price target of just under 116,000. And if we apply that to the breakdown point, that will give us a price target of around 83,000. If we go ahead and zoom out to our daily chart now, let's go ahead and get rid of these levels. We can also see, as a consequence of breaking those weekly ranges, we would see moves through the respective horizontal levels of support and resistance, which are acting as our directional trigger points. So our weekly range isn't a directional trigger. The daily range is going to be our directional trigger. The weekly range is going to be a good, strong indication that we're going to move through these daily trigger points. So daily trigger points being that high at 108K and being that low at 88 to 89,000. We've got some small support below there around 86,000 upwards, but we're just going to focus on our 88 and our $108,000 region. So this is quite a large range, right? This is a $20,000 horizontal consolidation almost that has been going on now since the 16th of November, which is coming up in around 2 to 3 months. So a very long range, a very strong consolidation, and the price action within these horizontal levels haven't really been developing in too much cohesion. There's been a lot of volatility, has been a lot of chop, and as a consequence of the uncertainty pushed by the Federal Reserve since that mid-December period, we have seen that volatility and that chop only get more aggressive. But we do know for a fact that a breakout or a breakdown from this horizontal range will give us confirmation in the directional expectation and potential targets Bitcoin will likely move to. For example, if we look at that prior horizontal consolidation we had all the way back in 2023, we're going to go ahead and draw it up over here. We had this strong multi-week or multi-month consolidation right over here. This horizontal range, we had our horizontal low, we had our horizontal high. We can see upon the breakout of that range, when the range finally broke, not only do we see an aggressive initial reaction, as again, the longer we see these consolidations, the more liquidity gets built up on the bottom and top side of these ranges, and when those break, we see these massive volatile moves. We saw strong directional continuations in the direction of which this range broke. So taking that and applying it to the current price action, we have got a very clear and a very strongly developing horizontal range. A break toward the upside and a break toward the downside will result in opposite but equal reactions in the price action, meaning a directional breakdown will result in a strong and volatile continuation downward, which has the potential for resulting in a multi-week, even multi-month continuation toward the downside. We'll discuss in a second. Whereas a break upwards will result in a strong multi-month continuation upwards. A lot of people probably saying, well, Whale, why are you acting all, uncertain and unclear? That is simply because the price action is reflecting that. The price action is reflecting uncertainty. It is time to plan. We have been talking about Bitcoin for a very, very long time. We told you guys we were buying at 16.5K every single day since then. We're bullish, we're expecting higher. We're bullish, we're expecting higher. This 8-month consolidation, when everyone's turning bearish, we were saying we're bullish, we are expecting higher. This is a bullish consolidation. We were taking profits in this range. This was the profit taking range we targeted ever since it's 16.5K, and that is how we're playing. So I'm not all of a sudden turning uncertain because the price action is all wacky. This has been part of the plan for 2+ years, that we were taking profits in that $96,000 to $108,000 region, and we have been waiting to rotate back into altcoins or back into Bitcoin when the time is right. But that time is not quite yet, under our guise of our personal investment strategy and of course our risk tolerance. We are waiting for clear directional breaks to be confident in the direction of which the price action is going to go. In the meantime, we are simply day trading the price action. We are scalp trading Bitcoin and various altcoins. So if we take a look at the charts are telling us, we can see just by zooming out we have got a massive area of liquidity which is starting to build up as represented by our VRPV. This is starting to develop larger and larger and larger, building up this volume range, okay, as the price action moves horizontally within this horizontal region. On the downside, we have got a massive low historical resistance range, which is essentially just a volume gap. The same is applied to the top side, as this is, of course, price discovery. When the price action breaks below a trigger point or above a trigger point, which results in the price entering a low historical resistance range, those appearing on the top and the bottom side of the horizontal region, we generally see, and as I showed you before, volatile and aggressive continuations in those directions. And that is what takes us back to that weekly target, 116,000, 83,000. So we're expecting those weekly directional moves, 116, which could take us into a multi-month uptrend, moving into March, moving into April, which we'll show you in a second. We are looking for a break of the range high at 108,000. We are looking for corrections that could potentially result in higher time frame corrections, stronger and deeper moves toward the downside, 70,000, or even potentially entering a bear market. We need to lose 88,000. Again, we'll show you. So let's take a look at the facts and let's take a look at why this range is important and how it could actually result in multi-month continuations up and multi-month continuations down. Let's start on the multi-month continuation up. So a break of the range high, as per what we showed in the weekly, would target a price point of around 116,000. Now there are two charts I want to show you, both a theory, which is a theory we've developed back in the prior cycle, and a chart on the vortex trend, which is a technical level, which can show you a potential target for Bitcoin. Starting on the date range theory, the date range theory is called the 12 to 18 bar theory. This is the theory I personally created myself. I created this in the prior cycle to give a good understanding of when we could potentially see tops based on the average monthly move from critical structural breakouts on the horizontal level. Those horizontal levels being the monthly high, so not the wick, the monthly high, the highest closing price for the month of Bitcoin from all-time highs, and the highest, or should I say, the point of which we break the bear market resistance. The bear market resistance being, in the prior cycle, 655, in the cycle before, around 10,000, 11,000, in the cycle before, 30,000. The all-time high prices being around 1,200, around 14,000, and around 62,000 in terms of the weekly highs. Not in terms of the all-time high, the weekly high closing prices. Simply what we do is we take the distance in terms of months from these breakout points, apply it to the future periods, we get between 18 to 12 months. Applying that from our weekly break, or should I say our monthly break of our bear market resistance and the prior weekly high, we have a date of April to March, or March to April 2025, which this theory is projecting we could see a top. So this theory alone shows that if we are able to break upwards from this range, we may be continuing for another 4 or 5 weeks in the upward direction into 116,000 before we then see a correction. Or maybe we continue higher and that theory is eradicated. It is a theory. Looking at the next chart, we have got our vortex trend indicator. The vortex trend indicator has historically not always predicted exact tops, but it has predicted major macro reversal points. Take, for instance, we look at that 2017 top. It predicted it absolutely perfectly, establishing this downtrend. Rejecting for a second time, we now established an overall trend and a strong bearish divergence on that price chart. We can see from here, we saw about a 50-60% correction. So it didn't predict the bear market, but we saw a 60% correction. If you were able to avoid that move downwards, that massively saved you a lot of money. Looking at the next one, it predicted the start of a multi 8-month long short-term, or 8-month long downtrend essentially, which was around 34% from top to bottom. Again, potentially protecting you from a large pull down. We can see the vortex trend indicator has not retested that top level again, and if we are able to retest that top level again, maybe that might indicate the next top for Bitcoin. So we do have potential to move higher here, but again, for us to do so, we need to start breaking these levels. Let's now talk about, why if we break down from this horizontal region, it could spell disaster for Bitcoin. Let's talk about it. A loss of this region would not only result in an entrance into that VRPV volume gap, but if we look at the weekly RSI, we can see the prior weekly RSI retest was at just above 62.09 on the RSI. 62.09 corresponds with a historically significant level of momentum on the weekly chart. If we look at every single time, you can go back for yourself, we're not going to do it here, every time we break above 62.09 or below 62.09, we see very strong multi-double digit continuations up or down depending on which way it breaks. So what does it mean? It represents the point at which, when broken, we see a dramatic shift in the strength between buyers and sellers, or between sellers and buyers, which can result in strong continuations in the price. So we break the horizontal region, we likely break the 62.09, which could result in a stronger and deeper correction than we may originally anticipate at 83,000. That is it, guys. Let's move to the short-term charts. We can see, all in all, if we look at the short-term charts, we've got a heap of support above us, and ideally, the most important level we are watching here in terms of our horizontals is going to be this $100,000 region. If we go back to that daily chart, you can see that $100,000 support level, this gray box we're watching to sustain above here. And if we look at the shorter-term charts, we can see that level almost coincides now with this multi-week uptrend we have been above. If we lose a multi-week uptrend, we are kind of having to hope we establish a equal low at a minimum, or at least a higher low at around 100,000, because we have been establishing again our low, our higher lows over here. So we want to keep that trend developing with higher lows rather than losing this low and then confirming a correction lower. So we're watching the price action very clearly and very cautiously over the next few weeks. Now, historically, Feb is generally a bullish month for Bitcoin. If we look at this data here, what does that mean for this month? It doesn't mean much, really. Again, historical performance doesn't really indicate future performance, but it can be one of those scenarios where history doesn't repeat, it often rhymes. It's something we can only find out at the end of the month. But, you know, a lot of people are saying, oh, February is going to be very, very bullish because of this. I don't think that's a good way to be, you know, basing your decisions on this alone. Again, imagine, let's just hypothetically imagine it's like 2095, year 2095, Bitcoin is still around. We'll have another, you know, 70 years of data on this chart over here. Imagine how many more different patterns, okay, or correlations that could develop over the course of 7 years, which completely could alter, right, the current perceptions and notions we have based on the current correlations. So the correlation is only as strong as the data set, not the other way around, because if it was the other way around, the correlation would exist even if there was two pieces of data on this chart. So, you know, we can look at the same way when we look at astrology, when we look at zodiac signs, we look at all that kind of stuff. But those correlations only exist because we have mounds and mounds and mounds and mounds of data to then, over many, many years, come together and create those correlations. But at the beginning, when there weren't those correlations, that data didn't exist, those correlations didn't exist. Because again, it isn't the data that causes the correlate, or it isn't the correlation that causes the data to be as is. It is the data as is which causes those correlations to exist. So I don't want to sit here and say this is important when I truly don't believe it is. But it's something fun to look at, and if you want to look at it, go ahead, but don't apply too much weight on it. Thanks for tuning in, guys. Hope that made sense. I'm just rambling a little bit there, a little bit philosophical, I guess. But I'll see you in the next one. Cheers.